having that cash flow and having available funds in your bank account allows you to make better decisions in all your purchasing.
Yes.
Across the board. Because you'll actually be able to look at, break even pricing on things. So
Yes.
you don't even know you could possibly bring down your cost of your goods significantly by running through and seeing if you buying more inventory at what cost would at what time will the cost go down.
All right, we're back. I want to talk about something that a little bit more in depth than we've talked about before, but we've covered this several times sort of in other conversations, but cash flow management, right? You said, and I agree, that managing your cash is probably one of the, if not the most important things you can do in a business to stay alive, to grow, to be profitable, to take care of the things you need, right?
Yes.
So, I think that it's a critical concern for small businesses, genuinely. I mean, all businesses are looking at how to maintain a healthy cash flow. And I think late payments from clients, unexpected expenses, slow sales periods, those things can quickly create financial strain.
Yeah.
So what I want to do is talk about how can business owners manage their cash better. And I want to start with one thing that I would add is payment collection process. How do you get paid, right? Have you audited how you get paid for what you're selling? So if you're retail, over the counter or online, if you're commercial through, net 30, or can you get paid earlier? These kind of things. We talked about this before.
I think you need to know your exposure at each level of, if you don't get paid, how much did you truly lose and what did it impact to you? Mm-hmm. You do need to know that. That's
why auditing is a good thing. Looking at it more critically and saying, how are we getting paid and can we adjust this? Mm-hmm. Because if you're getting paid net 30, we talked about this on a past episode of a client of mine who adjusted it, and her cash flow was like, in like a 60-day period, she had like, I don't know, 50 grand in the bank. And before it was like running thin, because she was basically invoicing them for, I don't know, half of
all her expenses were out.
She was
and
paying
she wasn't
for
getting paid for months later.
And then she wouldn't get paid for 90 days after. I'm like, that's got to change, So, just get the whole payment up front. They're going to pay it. Why not? They have the money. They've made a decision. Have them pay you. And she started doing that. And her projects are, $7,000 to $10,000 per project plus travel. So she sold 2 or 3 of them, and then boom, like, you got more money in the bank. Now you can make more decisions. I mean, not that you go spend it, but now you have the money to operate your business in a better way.
Correct. And having that audited and having that cash flow and having available funds in your bank account allows you to make better decisions in all your purchasing.
Yes.
Across the board. Because you'll actually be able to look at, break even pricing on things. So you don't even know you could possibly bring down your cost of your goods significantly by running through and seeing if you buying more inventory at what cost would what time will the cost go down?
The way I would rephrase that is that it puts you more in control of those decisions. You're not at the mercy of how they're being brought to you. You might be buying through vendors and they're presenting you a certain way. Now you can go back and renegotiate those contracts or renegotiate, because you can say, hey, we don't have to buy from you. We can buy from these other 3 people, because before these weren't an option, but now they are. So we want to work with you, but we have to renegotiate.
And there may be many companies out there that have a good service. They don't want to grow, but they're not going to sell to you unless they get paid up front.
Yeah.
Who knows? I mean, I've seen that in, different small industries, throughout towns and cities. So
that's right.
There's a lot of customers that want to get paid immediately. Otherwise they're not going to work. So
and from a marketing standpoint, what that says to me is that you have demand in the market. So if you are experiencing that demand is there and is rising, then you can go back to how you're getting paid first and other things that you're doing, and retool them because you have the demand that is dictating those terms.
Yeah.
And, if you're charging $500 for something, you might be able to charge $650 now or $700 because you have demand. And so now you need less clients because you can charge more, which changes the trajectory of how you operate your business, which creates a kind of a cascade of, benefit.
Yeah.
Another one that came to mind was budgeting for unexpected cost. You have this kind of like spike of things that happen occasionally.
Like right now we have dock workers strike.
Okay.
So, I mean, today's October 2nd, 2024, and that just started yesterday, 12:01 a.m.
Yeah.
So, I mean, there's already, I think today is 36, boats waiting out there. When there was 2. So, I mean, pile up. Costs.
Holding it hostage.
Yeah. If that's part of you, costs are clearly going to increase right now and be unexpected.
Yeah. Directly for
for us
thing, and then also through to whoever's got those products that we're waiting on them.
I
mean, that's what you're talking about, but I'm saying the people who are actually
every business is going to get it unexpected right now because that dock worker strike. Oh yeah, that's going to affect every American and every business.
Yeah,
for the most part, depending on how long that strike happens. So you just say there's an unexpected thing that's going to impact so many businesses.
So how would you advise or counsel some business owner to think about saving, or is it a reserve fund?
So I mean, then that goes with cash flow and the events. And if I was dependent on shipments coming into port and that's 100% of your business, then where cash flow is going to be most important to you is always dependent on how much inventory you can store in house and what is the time frame of knowing if your shipments are delayed 1 month, 3 months, 6 months, how that cascading effect. And that is very tough because I know a lot of businesses are getting it in. So now they're going to be thinking about, a lot of them are going to be looking at, I would assume, can I get this back at home for what price for stability? Right. Can I get the same product already made here in the U.S.?
Yeah, that's a great point because just talking about this dock worker strike thing, it changes the behavior of your buyer ultimately, not just the cost to you, but the cost long term because some people stop buying from you. So if you've analyzed that whole risk, then you're saving back product too, depending on how much, if it's perishable or not, to supply for a potential threat to that supply chain so that your buyer's behavior doesn't change.
Yeah.
Super interesting,
definitely
ripple effect.
Supply chains on goods and service in that industry. If my company was touching that, I would definitely be spending a lot of thought process on backups and improvements.
Well, we're talking about cash flow, but it makes me think about your just average standard, like a HVAC company or a company that they have equipment. They've got a, stockpile a few units. They sell a certain brand with a certain, license or whatever they have. And so they have to think about that too, because there's that part of it, not just the service part.
Well, I mean, people are going to have to probably pick and choose different products and services for the while. Like,
right.
Well, that model's not here. Right. So here are the models we got right now.
They have to get good at selling the other benefits of the other models.
Yes.
Okay. The other one I had that came to mind was,
on a plus side, they may be able to get some inventory that hasn't been selling.
That's true. Yeah. Get that off there.
Yeah. So maybe discount the stuff that you haven't been selling and get it out the doors now. Right. And then here's your opportunity.
What do you think about access to short-term financing options? Because all the things we're talking about, I think what happens if you don't have a plan in place for that from a cash flow standpoint, it blows up that short-term credit line or whatever you have operating.
Yeah, there's a lot of industries and there's where you can get paid up front and then as the collection comes, that's getting paid. So you can look at that, and I have seen that very successful. When I'm coming to mind, it's called factoring.
Factoring, okay.
And it's a loan. Basically, it's a loan. It's a higher rate loan, but it's kind of tied to specifically your repayment capacity.
Yeah.
So if, you are selling software as a service, you got a 5-year contract, you're collecting, essentially $100,000 a year, $500,000 you're going to collect over 5 years.
Mm-hmm.
And they're going to underwrite not only you, but they're going to underwrite the company you sold it to. Are they going to be able to continue to pay $100,000 a year in 5 years? They've been around a while, and then pay you up front.
Right.
And then if you're a startup, that could be used to, now not liquidate ownership and raise more capital.
Right.
So there are times that is good. Clearly, you need to have an established product, customers that, you don't have contract disputes.
Yeah.
Customers are happy with your product. You do have some seasonality. You could be in the growth stage, but you've had several years of, good customer service and, repeat customers.
Yeah. Right. Anything else that comes to mind, from your position looking out to business owners and what they're doing? If you, had to pick one thing that you do to manage cash flow, what comes to mind?
Here, cash flow is huge because our earnings are made off of, deposits. So cash flow,
so it's integral.
Really get use of all of your assets,
Okay.
Get all your assets to perform.
Yeah.
If you've got inventory, pay attention to it. How long is it sending? That is an asset.
Yeah.
If you bought it too much ahead of time, it could have been sitting into an account earning interest. That could be building
utility
assets too. Yeah.
It's funny. What it makes me think of is it's weird, but like I'm of the same mind. And so I kind of operate my household like that. It just happens where I walk around the house unintentionally and I'll see something that's not performing.
Yeah.
And I'll be like, this right here, how is this helping us? Like, how is this, as they say, is this adding joy? Is this giving you joy?
That's a good one.
It's like, no, this doesn't give me joy. This doesn't produce anything. It doesn't add in any way. This has got to go.
Yeah.
It's just taking up space. We'd rather just have the space. And I think, it's funny. You go outside, like we're trying to grow a garden and you look at this space and you're like, okay, this I can get behind, it may fail every single year, but we're working on it,
Get there.
So I love that advice is like, look at your current assets, people, equipment, technology, everything, and try to get the most use you can out of every one of them.
Yeah, really do.
That's a huge piece because you're going to find efficiencies that impact cash flow positively. You're going to find new ways of doing business that impact cash flow positively.
Look at us doing right now. We're doing a podcast. It doesn't cost a ton.
No,
most bankers go out there and they'll pay a third party, huge consultant to come and set like a stage. And now they spent $30,000, $50,000 in it. And it's,
I love our beautiful set.
Yeah. Just get in there and start talking and do it.
Yeah, exactly. Action. Yeah. All right. Awesome. Love it.
All right.
On to the next one.